Wingstop delivering appetizing growth of nearly 29% in same-store sales for the second quarter. The restaurant chain now eyeing a new average unit volume target of $3 million. Wingstop CEO Michael Skipworth joins me now to discuss, along with Yahoo Finance's very own Brian Sozzi. Michael, it is good to see you. Michael, you look at the stock, it's slipping a bit today, but listen, it has been a rocket ship. It's up about 45% already this year. And I looked through the report, Michael, Q2 domestic comparable sales beats. You boosted forecasts for that metric. Walk us through the quarter, Michael. What drove the business?
Yeah, Josh, I think our Q2 results that we reported yesterday really showcased Wingstop operating in a category of one. We grew same-store sales 28.7%, and it's important to note that same-store sales growth was primarily driven by transaction growth. Our supply chain strategy is working. We're delivering predictable food costs to our franchisees. They're making a lot of money, and they're opening up a lot more restaurants. We set a record in Q2 of 73 restaurants. So we're excited about the results translating to a really strong EBITDA number that we delivered, a record quarter for the brand.
Michael, it's Brian. Good to see you as always. And, you know why I always talk to Wingstop, why I've covered the company since its IPO many years ago? Well, it is one of the growth stories, the lone growth stories in a fast food industry that, in my opinion, is falling apart. Your stock's up about 300% in the past 5 years. If I'm right, you just took your long-term growth target for stores from 7,000 to 10,000. There's not a lot of companies in fast food doing that. So my question to you is, how sustainable is your growth profile?
Brian, we have so much momentum in the brand right now. Just a few years ago, we set an average unit volume target of 2 million. We already hit it within 2 years by continuing to execute against strategies that we believe have a ton of runway in front of us. That supports our new target of $3 million in average unit volume. Our footprint, we continue to expand. In the last 12 months, we opened 300 restaurants. So I think that really speaks to how the brand is resonating with consumers, and more importantly, just how strong those returns are for our franchisees who have a desire to open more Wingstops. As of the end of Q2, our pipeline for new restaurant development is the strongest it's ever been. So it gives us a lot of confidence in our ability to scale Wingstop to over 10,000 restaurants globally.
Mike, I'm curious to get your take on the consumer right now as well. You have unique insight there. Any changes in consumer behavior, Michael?
I think for Wingstop, we read and hear the same things you do about what other brands are experiencing, but at Wingstop, it's different. We saw growth across all income cohorts for the second quarter, and we actually saw, for the first time in my 10 years with the brand, we actually saw an uptick in frequency. So within that 28.7% same-store sales growth, I think we're just in a completely different category than other brands right now.
Michael, your same-store sales, talking to a couple of folks on the street, they've never seen anything like this before. McDonald's U.S. sales didn't even grow. Wendy's reported earnings today, just to hit a few tickers on Yahoo Finance. You're up almost 5 times. Your same-store sales were 5 times more than Wendy's. What is it about a chicken wing? What is it about a new chicken sandwich? Because the consumer is essentially saying they don't want what McDonald's is selling. They don't want what Wendy's is selling. I mean, what is it about what you guys are pumping out around the clock?
I think, Brian, what we've heard from the consumer is they are prioritizing value and quality when it comes to making decisions around how to spend their dining out dollars. And that plays beautifully with that Wingstop indulgent occasion. And we've been measuring record levels in both value and quality with guests. And I think you're seeing that show up in the business. And I think consumers are continuing to come back into the brand. And we're seeing something really exciting in that we're continuing to bring in a record level of new guests. But these new guests look a little bit different than our traditional guests. And they're coming back to the brand quicker for that second visit. And they're actually moving up the frequency curve faster, which gets us pretty excited about our ability to deliver on our outlook for this year, which, Brian, would mark our 21st year of same-store sales growth.
Michael Skipworth, Brian Sozzi, thank you guys both for joining the show today. Appreciate it.
Thank you.